We take a gander at the most recent Bitcoin patterns, including full-scale gambles and on-chain/stream measurements, to uncover the best opportunity to purchase Bitcoin and the dangers of purchasing BTC. For exchanging Bitcoin over the course of the following 2 to about a month, we are impartial to marginally negative. That implies we anticipate that steady should falling costs notwithstanding, we think Bitcoin is a decent long-haul speculation for the following 1 to 3 years and are bullish generally. That implies we anticipate that the Bitcoin cost should ascend in the long haul. Is presently a great chance to purchase Bitcoin. Bitcoin exchanged a reach around $20,000 in September and into October, 20% off its mid-August high and only 12% off its mid-June lows. The ongoing cost of BTC is $19,520. This consistent exchanging is a takeoff from the decrease in other gamble resources. The tech-weighty Nasdaq is down 5.86% over the course of the last month, starting around October 18, with the S&P 500 not far behind it, 4.24%. The non-exclusive gamble resource defeat started toward the finish of 2021. National banks are to a great extent to fault as they raise loan costs to decrease interest in overheating economies following the pandemic upgrade. August 26, 2022 saw CET Jerome Powell reaffirm the Federal Reserve's hawkish position at Jackson opening, a move that came close by another episode of ECB hawkishness. Then, at that point, came one more 75 BP climb in financing costs at the September FOMC meeting. However, maybe shockingly for the generally unstable resource, BTC hung tight around $20,000 and has moved for the most part sideways since, provoking some to call a base to the overwhelmed coin. Our view stays that the Fed should climb extensively past market assumptions. We likewise see areas of strength for a gamble for ECB climbs. These two perspectives together ought to support the gamble-off force in the close to term. For Bitcoin, in the interim, on the off chance that the cost drops further underneath current levels, we could see it coming to $16,000, or even $8,250 in the midst of downturn. Takes a chance in the US and a large portion of the West, in addition to an energy emergency in Europe. Things are not looking perfect for Bitcoin. Would it be a good idea for you to purchase BTC now? The speedy response is likely not. The large-scale background for Bitcoin is negative. We break down different on-chain/stream measurements for Bitcoin, which are bullish. Along these lines, generally speaking, we are impartial to somewhat negative. Hence, in the event that you have a 2 to 4 week skyline, this present time may not be the best opportunity to purchase Bitcoin. Why has the BTC value dropped? Large-scale explanations behind the ongoing Bitcoin cost. Crypto showcases nearly appeared as though they had halfway insusceptibility from the tech auction and developing hazard avoidance. Yet, ongoing cost activity has put paid to that idea. The general solidness of Bitcoin between mid-January and mid-April, when it choppily moved up with record-setting paces all around, was essentially the fleeting tranquility before all hell breaks loose. Bitcoin is down 70% since its November high of $67,734. Beneath is a BTC cost diagram showing the current Bitcoin cost. Also, there is something else to come. The essence of the matter is that US loan costs are rising. Long periods of low loan fees since the worldwide monetary emergency in 2008 have seen markets arrive at outrageous valuations. Who cares, assuming tech organizations are misfortune making on the off chance that the organizations can get without any problem. What's more, on the off chance that organizations can't get cash, they can draw in capital from financial backers, who themselves have likely acquired cash. Crypto markets have not been safe to the help from modest influence in the fiat markets. All things considered, crypto offers the tech long for adaptability and administrative exchange. Furthermore, on the off chance that there was any uncertainty that crypto was not profiting from low loan fees, then the new decreases in crypto as US rates have increased ought to eliminate it. Moreover, the connection of Bitcoin to Nasdaq began to increment pointedly similarly as US financing costs began to rise. This is a typical event over the entire course of time. At the point when the liquidity tap switches off, for the most part by national banks raising rates, the connection between different resources shoots up. This time shows up the same. How low can Bitcoin costs go? One activity is to perceive the way in which low costs could get were the Nasdaq to experience a 2000-style crash. All things considered, the Bitcoin and Nasdaq relationship stays around 65%. So where the Nasdaq goes, Bitcoin follows. Back in 2000, the Nasdaq experienced a 78% drawdown. Right now, the Nasdaq is in a 30% drawdown. A rehash of the 2000 style drawdown would put the Nasdaq at 3,500. So where might crypto be assuming Nasdaq were exchanging at this level? We gauge a relapse between Bitcoin/Ethereum returns and Nasdaq gets back from 2020 onwards. In light of this relationship, we find Bitcoin costs would reach $8,254 in the event that the Nasdaq tumbled to 3,500. This infers a 72% decay from current levels. Ethereum costs would reach $143 assuming the Nasdaq tumbled to 3,500. This infers a 92% decay from current levels. What else is going on in crypto? Stocks and crypto both acquired on Monday, October 3rd after the ISM producing buying directors record, PMI, tumbled to 50.9 in September against a normal 52.2. This is all there is to at least perusing since May 2020, which shows took care of fixing is beginning to affect more pieces of the economy. Be that as it may, took care of speakers stayed hawkish last week, and we are additionally expecting non-farm payrolls information on Friday. Any shocks could bother markets. Finally, downturn probabilities stay raised close 80%. The full-scale setting is as yet negative for crypto. Guideline is turning out to be all the more a subject all through 2022, with different leader orders marked as of now. Expanded guideline ought to mean less vulnerability around crypto markets for financial backers, which would be bullish. On the other side, over-regulation could smother development. The continuous administrative scenery will be vital to screen. There are a few large-scale occasions to monitor throughout the next few weeks that will impact crypto costs. Rising yields have precisely expanded the likelihood of a downturn inside the following a year to more than 75%. Expansion stays extremely important to financial backers, with YOY at a faltering 8.5%. Kim Kardashian has needed to pay $1.26 million over a crypto siphon and dump, featuring the dinky guideline around supported crypto content. Taken care of bad habit. Seat for management. Michael Barr said crypto ought to have oversight like that of conventional banks. Crypto hacking is on the ascent with around $1.9 billion taken previously as per Chain Analysis. Synopsis of BTC investigation. Basically crypto, including Bitcoin, will stay under tension. For Bitcoin, this implies the break beneath $20,000 could deteriorate. The principal close-term backing would be taken care of dovishness as opposed to any crypto-explicit elements. What's more, for long-haul financial backers, we actually figure a distribution to crypto checks out, very much like a portion to values additionally seems okay. Be that as it may, be ready for close-term shortcoming. For all our most recent examination on crypto markets, click here. Bitcoin and Crypto Value Trackers. Refreshed October 7, 2022. Crypto showcases at first revitalized for the current week after the ISM fabricating buying supervisors file, PMI, tumbled to 50.9 in September, the most reduced level since May 2020, against a normal 52.2. Bitcoin opened the week around $19,000 prior to hitting intraday highs of around $20,400 yesterday. It is presently exchanging at around $19,500 after the arrival of higher than anticipated NFP information for September, plus 263K. The drawback shock to the ISM PMI is an early sign that central bank took care of fixing is starting to influence the economy and slow development. This has added to the Fed turn story. The reasoning is that the lower than anticipated ISM PMI expanded the opportunity of the Fed siphoning the brakes, which would be bullish for risk resources. Notwithstanding, took care of speakers stayed hawkish last week. We actually anticipate one more 75 BP climb in November. In conclusion, watchfulness ought to be practiced around the new gamble rally as value markets are probably impacted by huge month and quarter end streams. We keep on having a negative predisposition on risk. Today, non-ranch payrolls, NFP, for September came in at plus 263K versus plus 255K assessed. We recently noticed that any shocks could bother markets, and joblessness tumbled to 3.5%. This straightforwardly counters the Fed turn account and gives little expectation that the Fed will hose the speed of rate climbs. Crypto markets have responded likewise. Bitcoin was exchanging at around $20,000 at the times before the NFP discharge and has dropped to around $19,500 in the minutes later. Execution of our files. Concerning our different lists, our Bitcoin record, plus 2% amazing, is up the most. Diagrams 1 and 2. Our DeFi and security lists are up around plus 1% each and our metaverse record is level. Ultimately, Our brilliant agreement record is the main that is down, 2% amazing. Our metaverse, 86%, and security, 75%, files are associated most to Bitcoin, while our brilliant agreement, 48%, and DeFi, 44%, records are related least to Bitcoin. Graph 3. On full-scale showcases, Bitcoin's connection to tech stocks drops again while its relationship to gold ascends to 47%. Outline 4. Brilliant agreement stage record, Ethereum, ETH, is up the most, plus 1% goodness, and EOS, is down the most, 4% amazing.